Last Friday I caught this trade on GBP USD, and today we're going to be talking about how I use time, news, and liquidity to find an A+ setup. Alright, to first understand the setup, we have to go back in time and look at news on February the 28th. So at 2:30 in the morning, we had a bunch of USD news, increasing the chances of higher liquidity and higher volume. If we go back onto the market, you can see this is where we took the trade. So the first thing we want to look at is buy side liquidity and sell side liquidity. Now I already said in the title that this would be advanced smart money concepts. So if you haven't already learned buy side and sell side liquidity, I have already posted a video on that, which I will link down below. But essentially, after price takes out buy side liquidity, we can expect for price to head to sell side liquidity. So price takes out buy side right here. We can expect price to continue lower and target this drawn liquidity down here. Now, if we just rewind price to buy side liquidity being taken right here, there's no guarantee that price is going to come down to sell side. So now we need to wait for some confirmation to happen, showing us that price is going to flip trends from bullish to bearish. So if we scale down into the 15-minute time frame and we let price play out a bit, what can we see happen? Well, firstly, we can see that price starts to make lower lows, lower highs, lower lows, and lower highs. But secondly, it starts to respect bearish fair value gaps right here. This fair value gap is being respected, and also this fair value gap is being respected. So now that we know that the market has flipped trends and is potentially going to push to sell side liquidity, we can now use the information that I said at the start, saying at 2:30 a.m. we're going to get a dump in liquidity, either going bullish or bearish. We don't know yet, but with confluence and confirmation, hopefully we can find the trade. So let's play price forward and see what happens up until around that time. And at this moment in time, this is where I get my confirmation that the market is going to head lower. So this is the first confluence I see. A draw on liquidity being taken / remanipulated. We obviously know that the market wants to sell high and buy low. So why would the market place their short orders here to target here, when they could obviously just sell higher to target there, giving them a much better risk to reward? So now we know that the market remanipulated this high, filled their orders up here. And if we look at Euro USD, we can see we have an SMT, right? Right here we have a high, and then we have a lower high. Right here we have a high, and then we create a clear higher high right here. So we have a drawn liquidity and an SMT being taken. At this moment in time, I was confident price was going to go lower, so I scaled down onto the 5-minute time frame, and here I looked for my entry. So after price took out this draw and disrespected this bullish fair value gap, I realized, okay, there's a chance at 2:30 that the market might just push up to buy side liquidity up here, right? It's not guaranteed that it's going to push bearish. The first confirmation that showed me we're actually like in an area where we might reverse is because we inverse this bullish 5-minute fair value gap. If we wanted to push towards buy side liquidity all the way up here, it should have respected this fair value gap and then it would have pushed up there. But because we didn't and we pushed below it and inversed it, somewhere around here I pressed short with my stop loss at this high, targeting down here, and then the rest of these draws. Here's the thing, this was a bit of a gamble, because for all we know, news could have easily just gone up and stopped me out and then continued lower, right? So trading before news is a bit of a gamble, but I was very lucky and news came in and it did not sweep me. If we check Euro USD, it would have got swept if I'd taken a short. But what news did was create another SMT. So Euro USD has a higher high, and then we can see right here, we create a lower high. This is great confirmation. We are very lucky. We're lucky we didn't get stopped out, and we're lucky that we got an SMT. As soon as this happened, boom, the market dumps. I closed my full here because that was enough. I didn't want more. That was like, in hindsight, yes, I could have targeted sell side liquidity, and I probably should have, right? It was probably like pretty clear that was going to go to sell side, but I literally just closed here because that was enough profits for me. we play price forward, and then we dump all the way to sell side. Dumping over 70 pips for Forex. To all the gold traders, they're like, NASDAQ traders, you're probably like, oh, 70 pips is nothing. But 70 pips on Forex in this amount of time is pretty impressive. It's pretty impressive. It's pretty large. Usually people take 10 pip take profits or 15 pip take profits. A 70 pips move with confluence is pretty mean. But yeah, this is how I used liquidity, time, news to find the daily bias and take this trade on Friday. Hopefully you guys found some value in this, and I'll see you guys later. Peace out. Peace out. Peace out. Peace out. Peace out. Peace out.